Hey guys, what's up? Alec back with the daily stock market, and look at that. We have Tesla up 6.2%. And if you missed out on the video yesterday, make sure you check it out because we go over Tesla stock, Lucid, Rivian, and a few other electric vehicle stocks as well. In this video, we're going to be going over big tech stocks. So yeah, we already talked about Tesla. We won't go too deep on them, but we're going to be talking about Google, Facebook, Meta, and Amazon. So if you like the big tech stocks and that's where you have some of your money in, then this video is definitely going to be for you. Make sure you stay all the way throughout the video because I'm going to be going over my specific price points where I'm looking to buy and sell on all these different stocks, these big tech stocks, if I'm looking to buy for a short term or if I'm looking to hold for a long term. So without any further ado, just like and subscribe on YouTube for these full-length videos, and let's dive right into it. First up, let's talk about Google, ticker symbol GOOGL or GOOG, same stock, okay, different class. And in the last 1 month, we can see that the stock is up 14%, so huge movements coming in the last 1 month alone. We see them closer to $90 per share at a 1 month low. On a 3 month low, we see it closer to $86 per share, okay? And we see a high closer to $107 per share. Now, if we can get in around even $85 to $95 per share on Google, I think that's a great place to be buying for long term. And that's personally where I'm loading up a bunch of shares for long-term investing, holding, and also short-term swing trades. $95 per share is a good one for me to personally be buying at because then I sell at around $103, $105 per share for some extreme profit. If we scroll down, we can even see some of the swing trades, a lot of option trades, but here you can see a lot of swing trades going on as well. Here you can see I sold around $10,000 worth of Google stock on a swing trade. We made around $700 on that swing trade. Okay, so now we see an interesting article by TipRanks. TipRanks perfect 10 list. These stock giants look compelling at current levels. Recognizing the right stock is a skill that every investor needs to learn, and sheer volume of market data on the main indexes and individual stocks on a forum stock analyst can present an intimidating barrier. Some of these market giant stocks that are household names feature trillion-dollar market caps and boast strong buy consensus ratings from the Wall Street's best professional analysts. So let's give them a closer look. So diving a little bit deeper in Google, we can see that Alphabet is the parent company of Google. Alphabet holds the next rung up on amongst public firms. Its $1.3 trillion market cap makes it the third largest company on Wall Street. Google is best known for the Google subsidiary, which has an iron grip on the lion's share of the internet search business and almost as much of an iron grip as large of a share in online advertising as well. So they have two iron grips right now. The first one is on internet searching, okay, and the second one is on internet advertising. The only one that comes close on advertising is Facebook, Instagram. Okay, other than that, Google has a stronghold on advertising as well. That's why we love this company. Google may be the largest revenue driver for Alphabet, but the company has a slew of additional subsidiaries, giving it footholds in a variety of tech-oriented fields. The more high-profile of these include ownership of DeepMind in the AI field, Wing, the drone-based freight delivery service, and Waymo, the autonomous vehicle development enterprise. Google, or Alphabet, has felt some pressure recently as it recently launched Bard AI and has been perceived as inferior compared to some of the competition, primarily against Microsoft's Bing and the new ChatGPT. Long-term, however, Google offering in AI has some important advantages based on the size and breadth of Google's subsidiary holdings. The company can draw on a deep well of data to feed the machine's learning aspects of its AIs. On the financial side, Google can rely on strong revenue performance and cash holdings. The company saw $76 billion at the top line of Q4 2022, the last reported quarter, and finished the year 2022 with $21.8 billion in cash and cash equivalents. While the total revenue was in line with forecasts, the company's Q4 EPS of $1.05 missed the expectations by 11% or 13 cents. Even with those whiffs, Alphabet still pulled in quarterly free cash flow of $16 billion. Looking forward, BNP analyst Stefan believes that the company's AI is the key to future performance. Writing, on the AI front, we expect Google to fight back and launch a string of generative AI supported services while also turbocharging existing offers. Google is best positioned given its development in its own large language models since it acquired DeepMind 9 years ago and is not dependent on a third party like OpenAI, has the best search tool and data set, its own proprietary silicon since 2015, and user experience DNA. To end this, the analyst gives the Google shares an outperform or buy rating while setting his price targets for around $123 per share or a 19% upside over the coming 12 months. Okay, so if you're a swing trader, a long-term specifically holder, or a long-term swing trader, this could be beneficial to buy Google stock, especially closer to $80 or $90 per share for a larger upside potential. Overall, the strong buy consensus rating here is based on the unanimous 32 positive analyst reviews. Alphabet stock price is at $103 per share and carries $129 average price target if you take all of the different analysts into consideration, or a gain of 25% in the next 12 months. Here we can see analyst ratings are strong buy, blogger opinions are very bullish, hedge fund activity has increased. We also see the news sentiment is bullish. The technicals are a little bit negative, and the fundamentals are also very bullish as well, with a return on equity of 26%, which is a really, really great thing to see. And it's a 10 out of 10 stock. So overall, Google is a stock that I'm dollar cost averaging in for the long term. I think we can see it closer to $125 per share. Once again, it's just going to take a little bit of time. And I think that this one can easily be picked up at $95 per share. That's where I'm buying the most. However, if it doesn't go under $95 per share, that's also a-okay because I'm just dollar cost averaging in for long term. Now let's go over Amazon at $103 per share. Okay, in the last week, they're up 4.4%. In the last month, they're up 10%. Okay, and in the last 3 months, they're up 20%. In the last year, they're still down 37%, so we still have a little bit of a discount to take advantage of on Amazon. And in 2021, we saw them as high as $183 per share, still down 43% from highs. Amazon, a name that doesn't need much introduction. Chances are we've all bought something from Amazon recently. The company is a giant among the world's retailers, the second largest in the world, with a leading position in the e-commerce sector. In addition, Amazon's cloud computing services, AWS, also holds a market-leading position. Amazon giantism in retail is complicated by its position amongst Wall Street's publicly traded companies. It's one of just $4 trillion plus companies when measured by market cap. Amazon at $1.03 trillion in market cap puts it in fourth place behind number 1, which is Google, number 2, Microsoft, and then number 3, which is Google or Alphabet. As the leading e-commerce firm, Amazon benefited heavily during the pandemic lockdown period But Amazon did see drastic losses last year as the pandemic receded and businesses and social activities returned to more normal patterns. In 2022, Amazon's share price fell by 51%, shedding well over 800 million in market cap, which we haven't seen in recent years. Shedding 800 million in market cap, almost $1 trillion in market cap is huge, huge discount. Okay, more recently, Amazon has showed a tick up in sales. Total revenue for Q4 2022 came in at 149.2 billion, up 8% and above the 145.4 billion that Wall Street has been expecting. The company's bottom line, however, missed the forecasts. On earnings, the company showed an EPS of 3 cents, comparing unfavorably to the expected 17 cents. The revenue guidance for Q1 was set in the range of 121 billion to 126 billion, which would represent growth of 4 to 8% year over year. Analysts had been predicting Q1 guidance of 125.1 billion. We saw another one of Goldman Sachs five-star analyst Eric saw Amazon in a good position for further gains right now, with a series of catalysts providing support for Amazon shares. We still see the forward catalyst path dominated by a mixture of number one, bottoming of revenue deceleration dynamics for AWS, and number two, continued proof points of a return to pre-pandemic levels of operating margins for North America e-commerce operations. Also, number three, stability versus volatility in the consumption habits of Amazon Prime household consumers in coming quarters. Longer term, we are unchanged in our long-term view of the potential for cloud computing, as evidenced by Amazon's $110 billion revenue backlog that grew 37% year over year. And in this top analyst, Eric's view on Amazon is worth buying right now. He has a price target of $145 per share, implying that a 1 year gain of 40% is coming for Amazon shares. So if you are a long-term swing trader or a long-term holder in general, this could be a good entry point for Amazon, especially like we were talking about if you can get it closer to that $90 per share mark. So personally, I do love Amazon and they're a stock I'm dollar cost averaging in for long term as well, but I think that we can see the stock closer to $85 per share again. If you look at the PE ratio, they are a little bit overvalued at current levels. However, in the last 5 years, this is has been one of its lowest PE ratios in recent years. So comparative to the PE ratio where it's been in the past, it could be a good deal, especially for long-term investors. And the last one that we'll be going over real quick is going to be Meta. Meta Platforms, ticker symbol META, or otherwise known as Facebook, up 20% in the last month. And this has been a stock that has absolutely skyrocketed compared to the other two, up 72% in the past 3 months alone. Now, if you've been following the channel for a long time, I was screaming to buy the stock under $125 per share for the longest time. So a lot of people watching this channel for a long time have made a lot of money on Meta swing trades and call options because it was one of the most obvious trades in the stock market, especially when it was going as low as $88 per share. That was like taking candy from a baby. We're now up 134% on that position there. We see that the PE ratio is still pretty low at 24, but remember when we were talking about this when it was at $125 per share, $105 per share, we saw the PE ratio get as low as 11. We never saw the PE ratio get so low on something like Meta. We also looked into the total revenue, which was awesome to see. Amazing revenue. We also looked into the net income, which was also a very standout company. And just fundamentally looking at this company, you see how strong the balance sheet is in the income statement. If you know how to look at balance sheets and income statements, this was a very easy play in the stock market. And That's why it recovered 122%, is because it was just a stock that was way oversold. It wasn't justified at all. This 70% dip in the stock price down to $90, $80 per share. The fundamentals were intact. A lot of people at the time in 2021 and 2022 were giving Mark Zuckerberg a hard time with the privacy issues, and he was in court a lot at that time. People were hating on the man a lot. So drove the stock price far down. Nothing was wrong with the fundamentals. They remained intact. So personally, I'm waiting for Meta platforms to fall closer to $135 per share, because I think that will happen once again. And I definitely know that they will go under $175 per share once again. So be prepared for that. Right now, we see big tech on a bullish trend. So, for all we know, Meta platforms could skyrocket to $165 per share next and then go down from there. So, we could see another leg up on big tech. Be prepared. Call options could be good this week. But if you want to see exactly what call options I'm buying, or put options with strike prices and expiration dates, and become a professional options trader, reach out to me here on the Daily Stock Market. Now 198,000 followers. Watch out for other fake pages. This is my only stock market, official stock market page. By the way, the Daily Stock Market, over 721 posts. Thank you guys for following along and showing all the love and support on YouTube and Instagram. If you want to join, click on success number 8, click on success number 7, read through some of those positive testimonials that are coming just from this week. All the positive success, many people making thousands of dollars with option trading just for holding just for a few days. Very short-term trading with high potential return. So thank you guys. Share this video with a friend if you think that they will find some value in it. As long as you keep dropping likes on these videos, I will keep making them for you guys. Thank you guys for all the love and support. I'll see you in the next video. Remember, don't time the market, buy the market. Peace.